Good morning and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team, joined as always by Joseph Dion of Apley Home Loans. And we've had some interesting numbers this week come out, different reactions in the market. So we're going to go through those a little bit. Start off with that CPI number that may or may not have been manipulated.
Maybe.
Just a little bit. Then we're going to look at an interesting proposal that's coming down the line from Fannie Mae and Freddie Mac that, hey, we're only 17.7 trillion in debt as a country. Why not add a little bit more, right? So we got that going on. And then some local news with some layoffs coming, and a big company here in Orlando seeing some tough times, you know?
Just a little bit.
Just a little bit. So let's hop into it, Joe.
Let's do it. Wait, CPI. You know what? Can I just say, I'm really proud of my call to you on Tuesday about what CPI was going to do based off of the PPI report that came out the day on Tuesday, right? PPI came in stupid hot, stupid aggressive. And what I noticed about the producers price index was this, that they revised back their March numbers to all of a sudden, instead of PPI being a 0.2 gain in March and core, it was a minus point, it actually dropped 0.1, right?
Why would they do that?
It's set up perfectly. CPI to come in soft because PPI is producer price, right? That's what the producers, that's let's think of it wholesale. That's before the consumer. Yep. So it was softer for the manufacturers. Then a month later, the consumer is going to see some relief. And that's exactly what we had here. What was amazing is PPI was really hot for April. So does that mean that CPI is going to come in hot in May and for May's numbers for in June? I don't think so, because I think they're going to report, they flip-flop every month, right? So they're going to report.
Yeah, they really have been doing that. And it was kind of interesting because it may or it may not be true, right? My favorite beverage of all time. There's reports that they took coffee out of the number yesterday.
I can't confirm or deny. I do know that, they're refuting it. They're saying they're not. It was just some type of calculation change on pricing and size and packaging that they removed from the reporting, but they're still reporting coffee as part of it. So I'm going to say it's still in there. I'm not going to say it's been taken out.
Yeah.
But it is interesting that a number of people are reporting this, a number of entities, a number of reputable, you have Kavetsky's letter that they're reporting it. So I don't know. I don't know what to believe on that.
Yeah, I mean, we've never seen anyone manipulate the numbers before.
Never. I don't know if that's what's happening. Let's be fair. But it was really, it was positive news. I love how, a bull market or somebody in a market that's looking to always find the good in things finds the good in things. Because CPI came in soft. It was flat year over year. This is great news. We've got inflation clearly under control. Inflation isn't above where it should be. Everything's roses is red. NASDAQ, QQQ, everything. All these at record highs. Everything's fantastic. There is no fear in the world. I have a theory on this. Can I go into my theory?
Sure, please do.
I'm going out of left field. The Feds have to at some point do something, right? They got to cut rates at some monetary policy that has to happen. But I kind of get this whole thing where the Feds are basically playing chicken with the entire world, right? Because we're kind of propped up right now, right? And we look great. And the longer we stay here looking and acting like we're amazing, the more and more pressure it puts on the rest of the world. And what we want them to crack first, so that when we crack, we don't look.
Doing
what
they announced this week? They're buying through the banks 5 million of their homes.
Gonna prop it up.
All these homes that they built that no one lives in, they announced they're setting up a program through their banking system that will allow people to buy the homes for, this is great, affordable homes. It's an affordable home program.
I like it. I like it. Okay, interesting. I like this. We got to stimulate different things. We got to find, but right, like this is like the craziness that we're dealing with right now, and I think that's kind of what it is like, you know, there's a lot of concern that is the US dollar going to be the dollar of trade, right? Like
yes,
that everybody comes back to. And I think part of what we see right now is some really good gamemanship. I love the fact that we're creative in that capacity. Like, hey, it wins for us. You know, don't be a bear right now. I've been a bear in the stock market for like the last, you know, week or so. And that was stupid because I don't see why the technicals are where they are because everything's saying it should be worse, but the bull market just wants to run higher. But you take some of this, and I think that's where the kind of the fun of this is we're playing chicken. We're trying to sit and be like, this is why the US dollar should remain the powerful dollar that is used for trade, that everything is based off for oil, this and that across the world. They're trying to play that game right now. We're stable.
Yep.
And you guys aren't.
The BRICS are meeting in October.
Mm-hmm.
And supposedly in October, they're going to release their new currency. That will be gold and oil backed. So, and there's been a couple more countries saying that they no longer want to settle in the US dollar. So, yeah, there is some gamemanship going on because the way we've always gotten rid of our inflation is we exported it through our debt. Yep. That's how we've always gotten rid of it. So, if we've got nobody buying our debt, we're taking our inflation back on ourselves. And that's one reason I think why you're seeing, you know, T-bills and interest rates not coming down is because less and less people want our debt. So what do you have to do? You have to increase the yields overall. So just kind of an interesting thing to look at in the whole scope of the picture that there's, like you said, there is some gamemanship going on out there.
I mean, you look at it, like I was laughing. Powell was in Amsterdam talking about how strong talking about how strong the American economy was and comparing like our job factors and this and that. And I was laughing because I was sitting there watching his interview on one screen and I was looking at news updates on all these corporate layoffs occurring, Walmart, everybody else, all these corporate layoffs being announced and hearing Powell talk about how strong our job market is. I was like, I'm not seeing it, but you know what? We did see, I mean, jobless claims came in line this week.
Yep.
But what was interesting for unemployment, the one thing that I think a lot of people missed in this report that came out today is we did see continuing claims tick up and go above expectations. Like they were estimating, and we were a noticeable amount higher than what their estimate was.
Yep. The number of jobs openings continues to fall. Mm-hmm. As well. So there aren't as many opportunities per se out there. So it kind of makes sense. And then, well, look at us locally, what's happened locally here. And I mean, this is a big one because their headquarters are here in Orlando itself. And that's Red Lobster.
Red Lobster, not Red Lobster. Not the cheddar biscuits.
The breadsticks.
Well, that's
breadsticks.
Like I need those Cheddar Bay biscuits. That's what I need. I can live without the rest of it, but just give me those biscuits. That's interesting. And they weren't trying to file for BK? Like
they actually they didn't. I believe it was 48 stores.
So they are closing.
I mean, not a restructure. This is a closure. This is an actual closure. And one of them is actually right down the road from me, right here on 436. They are closing the store and they're auctioning off all the items inside the store. That's not a restructure. That's a closing.
So,
and that's one thing, especially with inflation, with food prices increasing, is you're going to see more and more restaurants starting to close.
Red Lobster, so I think 48, I just looked up real quick. They've got about 700 restaurants, so locations. So they're closing out, about 8.5% of their locations are being closed, which usually when they do this, there's going to be a second and there'll be a third. They were talking about filing for Chapter 11. Like Red Lobster's in a position that they're kind of struggling there. It was really smart when they sold them off.
Because but it just goes, we had the discussion last week that what it cost you to take your family out, what it cost me to take my family out. When you go into a fast food restaurant with a family 4, family 5, and you're dropping a C note, you're not doing it that often. You're just not. You want a crazy one. My wife and I had an urge for nachos. Haven't had any nachos in a long time. Okay. So go to Publix, gonna get some nachos, get some cheese, get a pound of hamburger, right? Get some refried beans. Okay.
We got some salsa, some chips.
The mix.
Did we add sour cream?
Got buy one. Get
that's
one.
where you messed up.
I got buy one get one though on the sour cream.
It was only $9 for it.
$53. $53 for nachos.
That's affordable. Like that's easily 3 meals.
Like these are going to be the best nachos in my life.
Homemade nachos usually are better than going anyway, though. Let's be real.
My wife can make some awesome nachos. Let me just leave it at that. Just absolutely unreal.
But yeah, everything. So, and that's the hard part is you see all of this and we talk about it and I joke, we talk about this week in and week out. We talk about, it is promising to see that CPI came in softer than expecting. That's always, you always want to feel good about that. But the hard part is when you see PPI come in so strong and then you see them, and this is the part, like, how do you, and I'm going to say this, and it's going to sound so bad. But if I were to call a client and say, hey, you're getting a 7%, right? Like, let's just throw it like, we're like, hey, I'm going to give you a 7%. And then a month after they close, I go, oops, my bad. I was wrong. It was actually a 7.2%. Or I go, oops, my bad. I was wrong. It was actually a 6.99%, right? I couldn't do that, right? Like, because I already released and already disclosed and did everything. Like, I was like, how do you, like, I can't trust anything that's coming out because the amount of revisions, I'm like, we're revising. So they're sitting there and they're going, hey, in May, we're revising our March numbers when we're releasing our April numbers because we were wrong in March. So how am I supposed to believe that they were right in April? Right? You don't. And what ends up happening, like every time they do this, like the market reacts the way they want it to.
It really, and it's always a knee-jerk reaction. Oh, look at the headline. CPI, let's shoot up to a new high. S&P yesterday, new high. Woo! Oh, wait a minute. Yeah.
But that's the hard part is like, and I think we talk about all of this, right? Inflation is still strong, like it's still high. Yeah. It's not going down. The Feds have changed their target. They've changed the audit of what they're looking at. They're not talking about it. Somehow, some way we get a soft CPI number and now they're like, hey, we're back up to like, now they're saying we're going to get two rate cuts this year, right?
Well, Diamond came out this morning and said, guys, no, don't get all happy pants. Stop it. Because it's not solved.
Yeah.
They don't want to listen to anybody. It's amazing how nobody wants to read the details that are in the numbers.
I think you're right.
And it drives you nuts. But I mean, speaking of affordability, this was a number that came out from the National Association of Home Builders yesterday. This is kind of scary because affordability, 66.6 million households cannot buy a home of $250,000.
First off, like in Florida, like let's find a home of $250,000 or less.
Yeah, you can't. Yeah, that doesn't need a new wall, put on or something. So you think about that. It's just you look at that and you think about the pool of buyers and why are home sales in the toilet.
So this pyramid is like, so if I read the top, like greater than 1.6, it's saying 2.8 million people can afford that home.
Right.
Is that what, that's what I'm reading, right? So that's where it goes. Okay. So you've got your 66.6 million. Okay. So that's your bottom tier. You've got 40.5 million people can afford a house that costs 0 to 150K. That's cool. I hope you can afford a house that costs 0.
But it just, it goes to show you how inflation, especially with homes, is just gone through the ceiling, and has taken so many people out of the American dream of owning a home these days.
Mm-hmm.
You know, it goes back to numbers where, I mean, here in Florida, you got to make $120 million or $120,000 a year to afford a $400,000 house with the current interest rates. Luckily, I mean, we have seen, and this has been kind of nice, from about a week and a half ago when we peaked at that 4.7, we've kind of pulled back and we're down to 4.36. So we've seen some relief in the mortgage rates over the past week or so. So that's nice to see.
And that's usually, stocks are, riding all the time. All that stuff has, bond market will go up if stocks go down, which means that rates will go up. Like you'll see a lot of this stuff kind of start to change a little bit.
Yeah.
But we saw that we've almost got a point increase in the bond right now. Nothing much. That's not going to have any impact. But it's interesting, different pieces. And you mentioned like the housing, like let's talk about housing starts that posted today. That report just came out, and it wasn't as strong as they had hoped it to be. It improved from last time. I think they said housing starts, is 1.36 million annually unit is the pace that we're on, which is up 73,000 from last month's revised number. I don't remember last month's. I'd have to pull it back up. I don't know if they revised last month's down lower so we can make it look more positive. I don't know. But, they're continuing to say what I did see was housing permits, which is kind of like housing permits is like new housing permits kind of tells us what is really going to happen, right?
What's coming down the road?
Decreased to 1.44 million units. So that's down 27,000 from last month's figure. Which
Bill, I know builder confidence dropped again. Builder confidence has dropped again.
Yeah. So I think builders' confidence is at the lowest it's been in a while.
So there's just so much softness in the market. And this one really, really kind of hit me because Freddie Mac, who is really all the first conventional mortgages are sold to, Freddie, Fannie, Ginnie, all government-backed entities, correct? They've never been in the second mortgage arena, ever. Usually when a second mortgage is done, it's a portfolio type product by the bank, correct? So they now are proposing to get into the second mortgage.
Interesting.
Because what they would do, their proposal is that they would take second mortgages with less than an 80% combined loan to value ratio. Okay, so who is that? That's the older generation, the boomer generation, right? The people who've got these 3% mortgages and they don't want to move because you don't unlock your equity until you sell, really.
Yep.
Unless you've got a home equity loan, right? So this was an article that I was reading, is that, funny how Wall Street tries to get homeowners to pay interest and fees on their own money. Well, Wall Street's looking at it right here. They smell 11 trillion in tappable home equity. We've got all this debt. We have $17.7 trillion worth of consumer debt. Of that, 12.4 million is mortgage. 12.4 trillion is mortgages. So what should we do? Create more debt. We need to create more debt to keep
spending.
Keep everything moving because everything else is tapped out. We're tapped out credit cards. We're tapped out buy now, pay later. We're tapped out on our cars. We're tapped out on our savings. We're tapped out on our 401ks. Where's the only place we haven't tapped yet? Home equity. So now, if they create a home equity market, secondary market, what's going to happen? The percentage, the amount of home equity, where you see it's been going up recently, is going to continue to it is going to shoot up.
Yeah, it's going to skyrocket. Now, what are some because I think my immediate thought process is like, okay, well, let's say Freddie, they do it right. Well, is there some aspect of that that's maybe kind of a loss mitigation structure? Like we control more of the loan. So if we see foreclosures go up, we can see and control how foreclosure process goes up or how we mitigate that so that we don't see a crisis.
That's a good question. Because they're in first position anyways.
Yeah, because if they've got first and second, right? It doesn't do what happens if and I'm just thinking this through okay, well the servicer these banking institutions, they do the first, they get the second, right? That people stop paying on the second, they go to foreclose, right? Handle that. Now that increases, if Freddie Mac or the federal housing as a whole, Freddie, Janie, all that fun stuff, they start holding HELOCs as well and having an avenue for those to be sold. Right? It gets it off the books of private, creates more competition because now non-depository institutions can offer it as well. Yep. But what does it also do is if we need to do something to help stave off foreclosures, they can control it a little bit better because now it's just on their books that they're handling this.
Yeah, that's a good question. I hadn't thought about it that way. But because now when you foreclose generally, during the Great Recession, those seconds just your SOL dropped so much that there was nothing there. So the first got what they could, and the second you were done. Don't even try. Just it's a write-off. And if we start, and there is always that possibility. I truly believe that if we start seeing home prices start to fall, is Freddie going to want to write off those seconds? Are they going to force you to, possibly restructure, do something? There's so many questions about it. It's not something I think they're going to delve into overnight, but it's to me, it's very interesting that they put this proposal out there.
Yeah, and then you go into that I think about I'm thinking about the kind of different pieces here. It's we talk about the housing collapse, you had a lot of people that were, quote unquote, structurally defaulting, right? Mm-hmm. Because they were wait a minute, the process is going to take 3-4 years to go through. I'm just not going to pay. I'm going to save all these payments. I'm going to move it out of it so that I don't have to, I'm going to BK and then in 2 years I'll rebuy. There's a lot of incentive because they didn't have the equity. They didn't have this, rates were a little bit higher, but they weren't crazy. Now, what happens if somebody is and I'm thinking if we see a foreclosure skyrocket, right? And the majority of the world is at 3% interest rates, mortgages are at 3% interest rates there. Do we see it really, do we see we don't see a 20% haircut. Do we see a 50% haircut?
It's good questions. It's just, you don't know. You don't know what's going to happen. But it's when you start thinking these things through, it gets scary. It can get scary really quick. Very quick.
I believe in our government, so I trust that they have our best interests at hand.
And we're done. So,
why are you laughing?
I have no idea. No idea whatsoever why I'm, I just.
Do you have any fun numbers this week?
Give me a second. I got to pull my thoughts back together.
Got to reel it in anybody's radar here.
No. Nope. Oh man. Oh, so breaking into this week's numbers, we had a pullback. We had that nice week last week of 538.
We did.
And we pulled back to 520 or 427 units.
Okay.
Our seeing inventory increase again. We jumped to 100. We jumped to 105.
Okay.
So we're well above that 6,000.
Yeah.
And then in the condos saw the same thing. Pull back to 133, and then again, big increase in the number of units. We're actually above 3,000 condominiums available right now, that's quite a few. We had one with a client that we did the inspection, and we're like, well, we need this, and this because the AC unit was. They'd actually taken it apart and kind of reassembled it in the ceiling. Never seen that one. That was a first. And it had polybutylene. So well, we're not, no. So had a polite conversation with them, canceled. They called back the next day. oh, they do this. I'm like, well, it really doesn't cover it. My estimations are this. Oh, okay. Called us back late last night. Seller's willing to do this. So the sellers know that the market is soft.
It's a little soft.
And I explained to my clients, like, sometimes it's better off just being polite and being quiet, because it was a cash transaction. We've proved up all of our cash. They know we've got it. And she let it slip that he's looking to buy a commercial property. He needs the money for a commercial property. So
that was her fault.
That was her. Yeah, she shouldn't have let me know that. So
sure, definitely should.
Then we got our numbers. So our months of inventory holding pretty steady above 3 months right now. Original list to sales sitting right at that 94% number, right at 97 on the final list to sales. And our days on market are staying up at 54.
Okay.
We're in a consistent doldrum is the way I put it. It's just people who need to buy are buying, people who need to sell are selling. And then you look at it graphically, you see, we're pulling back just like we did, which I was expecting it to start to stay up higher, especially schools are getting done right now. So should be a lot of people starting to go out and look, to get the families moved before school starts next year. And then here's our inventory. I mean, just consistent since the end of March, we have consistently moved higher in the number of units on the market. And you're seeing articles out there looking at all of Florida, and Florida's inventory is up over 30%. And you're seeing, again, more price decreases than you've ever seen in Florida, just because the inventory is shot up so high.
Yep.
Then we get into our condos. I mean, look at this condos. We're now nearly 5.5 months of inventory for the condo market.
Okay.
That is a complete buyer's market. Then our days on market, average days on market are sitting at 70. Then we look at our inventory, just skyrocketing. We're up over 25% alone since the beginning of the year in the condo market.
Okay.
So
it's a lot.
The Orlando housing market has really softened. It's interesting because the Orlando Business Journal put out an article yesterday that made it sound like the Orlando housing market was on fire. And I just sat there and laughed. It's just like, you can spin anything the way you want it. Interpret your numbers the way you want it. But to me, it's a very flat market. It's moving along, but there's nothing exciting happening in the Orlando market right now. But as long as it keeps moving, we stay busy. We're doing all right overall. So had a couple great opportunities we got one closing tomorrow that both sides of a duplex, believe it or not.
Nice.
I think they got a really good deal on that one. So anyways, thank you all for joining us. As always, we enjoy it every Thursday. Please come back, like, subscribe. And Joe, we'll talk to you again soon. Take care, everybody.